Hello and welcome to Happy Hour, everyone. TGIF. Oh, no, wait a minute. It's Monday.
TGIM. That's Rebecca Gomez. I am Cody Willard, and this is where we dance to the music. Today's music, Sly and the Family Stone.
Nice,
all from
nice.
Dance to the Music album.
Well, hope everyone had a good weekend. I know if you live in Dallas and you're a Cowboy fan, you're not enjoying it, but hey, blue, big blue. Woo!
Yeah, I like how everybody tried to talk trash to me when I walk in today. I'm like, but guys, I was cheering against Romo just as much as I was cheering against Manning.
Yeah, but you were cheering against the Giants. So
in the end,
that's all that has to be said.
I was actually
But you know what?
for my hometown.
I also want to give kudos out to the Chargers because my parents and the extended family live out in San Diego, so they're really psyched to see the Chargers. I'm hoping for. Yeah?
Did you say you were watching the...
Go Bolts, yeah.
Go Bolts. Is this
Chicago,
am I shaking again? Too much caffeine? Too much caffeine?
No. You're good, Cody. You're good.
Right,
all right, let's get down to some biz.
All right, a little bit of markets. So IBM says biz don't suck, and the bulls finally get a respite from the relentless selling. That's really the story behind the rally today, guys, that the panicky sell pressure from last week has finally let up, at least today. In other words, it wasn't as if the traders were rushing out to buy and get long this market, but the buyers finally weren't overwhelmed with forced selling for the first time since the calendar went 8. In other words, 2008, Rebecca.
Got it.
Tech, which often trades with bigger magnitude than other sectors, also known as beta, was a stronger subsector than the strong market overall. Oracle joined IBM as the highest flying, high-profile tech stock. Apple, BMW, Nokia, and a bunch of other techies were up huge too. The semi-indices, my favorite high-risk name in the sector would be NVIDIA, by the way. The semis were up more than 3%. Gold continued its rally to $1,000. Anybody want to bet me what hits gold first? Gold, Google, what hits $1,000 first? Gold, Google, or GoGo? And energy rocked higher too. The most glaring underperforming subsector in today's market, though? Retail. Sears' ugly warning of lower than expected sales provided some yin to IBM's upside yang, and retail seems as bidless as a tofu cow at the Lincoln County Fair. You know, I'd love to see the skinny bitches get over that rodeo. Hey, it's the name of a book. I'm allowed to use it. Overall, the market.
You were talking about me. Darn.
I certainly wouldn't use the B word in your direction, my dear. At least not on camera.
Yeah, you do it on camera rather than behind my back.
I wouldn't do it anyway.
All right.
The markets traded up all day with little of that sickening intraday volatility that the action brought every day last week. Finally, can you imagine being the hedge fund manager who was down 10% for the year on Friday and finally decided to puke/sell some stock? Only to force himself more underperformance on today's pop. I know a lot of guys in that boat, and I guess we all have to hope that the Hope Alliance, the Fed cuts, and all the other waves of free money for anybody who's rich actually lifts all those rich guys' boats.
All right. Hey, we have some breaking news. You love when I say breaking news.
Oh, my God.
It's actually a Fox Business Alert. We have Genentech's earnings out after the market close, and basically its quarterly earnings were up 6.4%, and that's thanks in large part to its best-selling drug, Avastin. However, last that we checked, Cody, right, the shares were down in after-hours trading, and this is because investors weren't as optimistic with the sales number for its top 3 drugs. And I think, you know, the interesting thing about this company in particular, and Avastin, their drug, this drug is used for colorectal cancer and lung cancer, and what they're trying to do is to get the FDA to approve that it be used for breast cancer, and thus providing a whole new source of revenue for this company because it's always based on these particular drugs. And right now, this one's in focus, but the FDA, an advisory panel in December, rejected that drug being used for breast cancer. The entire FDA committee will look at it. But that's the key for Genentech, at least in the short term.
You know, I had someone post on my Facebook page. By the way, you guys send us emails, Cody@foxbusiness.com, GoGo@foxbusiness.com. We're on Facebook. You guys name it.
I updated my Facebook
I
this
saw that, as a matter of fact.
Yeah.
But someone posted on my Facebook asking me for some advice on some startup biotech stock that they were looking at. And really, I always tell everybody, when it comes to the biotech, I don't trade biotech. It's very tough to gain the regulations of it, and it's very tough to gain the actual drugs in there. It's just something I've not developed that expertise unless you truly understand the dynamics of the government, the dynamics of the business itself, and even the chemistry behind it. I just don't play that
well.
well.
And another thing, with any time with drug company stocks, especially now with the election, you don't know who's going to occupy the White House and what they will do as far as health care. You know, what type of changes, if they're going to put more regulation, if they're going to have a universal health care program and force the drug companies to sell us cheaper drugs, which would be nice, but on the flip side, that would hurt the company's stocks.
Do you know, I actually do know who's going to be in the White House, but I'm not going to reveal it today.
Hey, let's bring in Steve Grasso. He's a trader at Stewart Frankel.
Steve, how you doing?
Sir.
Welcome
Good
back
to
to the
see you
show.
again.
Steve, hi.
Nice to see you.
Likewise. Now, we have a couple of things to talk about. Let's start off with Sprint Nextel. We got this word that they're announcing a lot of layoffs. And it's not surprising because they had 5,000 layoffs last year, and they're having trouble merging the acquisition with Nextel. But as Cody and I were talking about this, how I see this, Steve, and give me your take, is that, you know, we were worried about the job market because that's what's holding up the consumer at this point. So now, instead of job losses just in the housing market and on Wall Street, now we're seeing it in other areas, and because Sprint is blaming the housing problems and people not paying their cable bills on time.
Subprime will filter out from subprime.
I think there's a couple things. Congratulations, you didn't take a breath for the first 5 minutes of the show, so that was amazing. I actually wanted to get up close to see if they were where the oxygen tank is. That was amazing.
I took a big breath there.
You were firing on all cylinders. It was perfect. I think that the important thing, as you mentioned, I think obviously it's about jobs, and if people don't have jobs, they can't pay the bills. I think we're still at record lows with unemployment. So I'd be careful about throwing around things are, you know, Chicken Little, the sky's falling at this point.
Well, although, could this just be the tip of the iceberg? I think that's what she's looking at, is that the trend has changed. We certainly from 2002 to 2007 had job growth.
Right.
And as we are entering 2008, have we seen the tide turn? Is the ramifications of all of this subprime meltdown and the financial credit crunch that's hit all of our economy finally filtering out? And we're seeing a lot of sectors start to pull back.
They've taken the lead. All the rest of the companies have taken the lead from the financials, where financials used to lead the market up. They used to drag the market down. On Friday, we talked about it. Friday, you saw the market down and financials up. That's the first time that that's happened, as far as I can remember. You know, any type of circumstances. I don't remember it since August.
I mean,
financials be up.
But yeah, as Cody says, you take it little by little because, well, even beyond just the jobs situation. I mean, now we have Sears out today.
Right.
You know, Sears, which also owns Kmart, getting hit as well. They're blaming the subprime, but I think their problems go further than that as a company. But once you start seeing all of this, it builds up, Steve.
Yeah,
and
I think here's
little
the problem,
but builds up.
I guess my point is this. I think what the rest of the market is taking the lead from the financials is that the financials are trying to get ahead of the curve and try to just air their dirty laundry. They want to get out there, and John Thain leading at the helm right now, we spoke about this last time, wants to just get all the dirt out. So I think what the rest of the market feels is if let's get all of our dirt out sooner rather than later. Let's give up the first couple of quarters. I don't think this is a huge bearish thing. I don't think it's the tip of the iceberg.
It sounds like you're sort of extrapolating out the last 2 days worth of market action into some sort of bigger, broader trend, saying that we're trying to put a bottom into the financials themselves.
Right.
Is that what you're saying here?
I can't pick a bottom, but I will tell you that we'll all know it, and we'll all say, geez, we should have bought, you know, Merrill 25 points ago. Net.
Do you like the financials down here?
Absolutely.
Well, that's a good point because you see a lot of the foreign governments thinking that these investment banks are a bargain, and they're throwing millions, billions of dollars into these companies.
We spoke about that the last time I was on, and I said if the United States...
No, it's a new topic, Steve. It's all fresh and new.
Sorry, but we did have some pullback in the financials. So, you know, if you live by the old traders rule, buy on weakness, when everyone's a seller, we want to be buyers, you'd be choking on 1,400 points in the Dow. So, obviously, you know, people don't have this game down, and that's why it's a horse race every day.
But on the other hand, you can't really compare like individual investors to these sovereign wealth funds. I mean, they can afford to lose several $1 million, but if you're talking about somebody who wants to buy for their personal portfolio, you know, and then this is not the bottom, so they buy and they like, heck, now my stock dropped another, you know, 5%.
It's the difference from sitting on a ton of cash, a ton of cash, or worrying about credit issues. So if you have to borrow the money, credit is your top concern. It's the first thing you think about every day when you wake up. If you're sitting on a pile of cash, the only thing you have to think about is, let me gobble up some investments. And like you said, if we don't think they're investments here, but the rest of the world does, shame on us.
Yeah, and just one last point on that Credit Suisse, they're saying that, you know, that they're bullish on U.S. stocks, where a lot of times, you know, just as Steve's saying, You know,
Amen.
more so than European. But.
It's certainly a better time to be buying today than it was, say, 3 months ago when the Dow was up 13%.
And who knows, in 2 days we could have a better buying opportunity.
There you go.
All right, so Steve, we'll hear more of your stock
you.
picks later on in this show. But